All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, it's Monday, of course. Katie McGarrigle. What is it? Zadie McGarrigus.
Yeah. Okay. Party up. DMX. R.I.P.
Yeah, we're bringing the noise to start this one. It's not really the DMX song, though. It's just a whistle. You know, it's like this annoying whistle. We need
It's good.
A longer intro.
Yeah.
You know, give me like a minute and a half to get warmed up a little bit.
A minute and a half.
A little bit.
We'll see the chat start to drop off. Speaking of, what up, chat?
Yes, you saved us there. What up, chat? Go over to YouTube, stream it over there. No shade on Tasty Trade. There's just no live chat.
You know.
You don't have to participate, but come on.
I know. Well, we've gotten, when we first started to stream on YouTube, I had the profound joy of moderating a lot of it. And back in the day, the bots were coming in way too hot.
Okay.
Way too many gross and wrong things to say. We've since cleaned it up. So, yeah. And we're seeing a lot of new people joining us in the new year. So, welcome if you're new. Welcome if you're old.
Yeah.
Happy to have you.
Big Deal Donuts, Grumpy Mike, Jason Tatum, Night Moves,
yeah,
Gapper, Sophos.
So I'll also give a shout out, and I don't know if he watches this show, but I got a homie that goes to the same gym as me, and he's always in there grinding, doing the workouts. So shout out to Desmond if you're watching.
Oh yeah. Speaking of the gym, I can barely see this. Lone Sophos, is that like just a picture of a six-pack there? What we got going on in the chat?
Oh, yeah.
Is it like a locker room shot?
Like yeah.
I like that.
It's like a little bit of a thirst trap.
I'm all for that here on the Tasty Crypto Show.
You're pro thirst trap?
Yeah, we're pro thirst trap here. Absolutely.
All right.
Katie, what do you want to know today? We've got everybody over here. Type something crazy in the chat. Say hi to Katie. What do you want to know?
Man, that is a great question that I am completely panicking on.
Go anywhere. We're asking people whether they're pro-gun lobby, what they're wearing for Halloween, their feelings on you name it. What do you want to know?
Well, based on the conversation I was having with you and some of the other boys, are you pro-bills?
Oh, okay.
Or anti?
Yeah, there are some haters out there.
I know.
Calling Josh Allen overrated.
I think that by default in this office, even, obviously the Bears did what they did, so I have to now, support the Bills, but give us a shout. You're pro-Bills or not?
Yeah, my wife is a Ravens fan. She's from the area originally. They're looking pretty good.
Okay.
Not going to lie. Ravens looking pretty good, obviously.
You guys going to have like a massive banger of a party?
No, we might have a fight.
Oh, okay. We're going to have to squad up.
Yeah, no plans yet. If I have a party, though, I'll let you know. You're
Thank
100%.
You. We're within shuffling distance of each other. Not to dox us, but...
Yeah, that's right. We live in the same general vicinity of this big city.
Of this major metropolitan area.
Well, Katie...
You want to know anything? Is there anything you want to throw in the chat?
Yeah, I guess let's stick with the football theme. Who do we have winning the Super Bowl out of all the teams left? Let's see where
Who's left.
At.
Who's left now?
There's a lot of teams left. AFC, Houston, Kansas City, Buffalo, Baltimore. We've got a game tonight. Who plays tonight? Chargers and Vikings.
Okay. I mean, honestly, I'm just going to keep going with the Bills.
Okay.
You guys have been hurt in the past, and I think that this whole office, or at least, the portion of the office that is from the Buffalo area, will absolutely lose their minds if it happens, and I would love to see that for you because we can't have it. So I want to see
not yet,
joy.
It's not this year.
Not this year.
It's always next year.
There's always next year. Yeah, but I want to see you shine.
Well, I appreciate that. Yeah. It's nice of you. We got some Ravens fans, Lions, Vikings, everybody everywhere. And yes, we do need a thirst trap token. I'd like that. Katie, let's jump into the show though. We could go anywhere. We've titled this one DeFi and Liquidity Pools. When we were doing Where Do I Start, we hit on DeFi, that concept, and I think that we demoed liquidity pools or talked about it briefly at the end of this series. We can continue there, jump into it right away. We can talk about price action in the market, big bounce here into the end of, the traditional trading hours when you look at the equity market. Bitcoin back up to 94,000. We can talk bag battles.
So many places to go.
Where do you want to go first?
Okay, let's start with just like a quick recap of where we are, because to your point, and to Shelly saying earlier, who's the winner of the bag battles this week anyways, like things were looking all right-ish last week, and then they kind of rolled over. So talk me through like what you're thinking and what is happening.
In terms of your specific token and bag battles,
mostly
or
just
the
in
broader
terms of
market?
the asset class as a whole.
Absolutely. No, I'm just kidding with you. I think you made
In terms of Harry Potter, Obama, Sonic 10.
fantastic choice, obviously. Yeah, let's take a look at what's going on here. So we've had a bit of bearish momentum. I mean, if you look at kind of how we ended the year, it was on a little bit of a weak note. The first couple of weeks here into January, that's continued. If we look at right where we were, and I talked to the guys on OTCL, Mike and Nick, about this earlier today, pretty much unchanged week over week. That was true up until an hour ago. So a little bit of a bounce here. But yeah, we've been chopping sideways, consolidating, if you will, between that, let's call it 90 to 110,000 range.
Yeah.
Not much has changed on the volatility front. You can see still structurally bullish. I think the trend is still bullish in there. You can see that when you look at weekly or monthly momentum, 3-month price trend, Bitcoin up 43%. But over the last month, it's been a weak start, a soft start to the year. Interestingly, we've seen this before during the first year of a halving cycle, which is what we're in right now. That start to the new year, start to January, has seen some weakness, and then it's exploded thereafter.
Yeah.
I don't know. We'll see if that happens again this time.
Yeah.
But if you're worried about some of the volatility, I think this is just a short-lived period when you look at the equity market as well. We'll talk about correlations here in a second, or we can jump over to them really quickly, actually.
Yeah.
Strong positive correlation, very strong inverse correlation with the VIX. I think, again, if we get out of this period of volatility, let's see what happens. There could be some catalyst post-inauguration, executive orders related to crypto, related to SAB 121. Clearly, we have a new team coming in when you think about a new SEC commissioner. So there's a lot that could possibly act as a tailwind here. But again, a little bit of a weak start to the year. That said, really range-bound trading here. If we look at implied vol, not much has changed. Here are your volatility ranks. So on a 3-month basis, kind of middle of the range. Same thing when you look at the 6-month and 1-month period, or 1-year period, excuse me. Expected move for Bitcoin about 8,000, ETH 300. You've been on the show many times now, so this is pretty much where we've been for the last couple of months. Trading ranges, and again, the view here has been sell a little bit at the top of the range, buy a little bit back, recognize that the broader trend is bullish still. I try to stay on the right side of that. Doesn't mean that there can't be contrarian trades at times. If you're trading this from the short side, your opportunity to cover was at the bottom of the range earlier today. And then you've got, a bit of a bounce here. I think rinse and repeat. This has provided a lot of trading activity and opportunities on, both sides of that range. We've just been hanging out near the low end of the range recently.
Okay.
But again, nothing's changed. Here's your expected moves, $300 or so for ETH, about 8,000 for Bitcoin, Solana $20, and you can see the range for Doge as well.
Yeah. Yeah. So we've definitely, since last week, seen a little bit of an expansion, obviously, in that range for Bitcoin in particular. But I love looking at it this way. Like I've said before, it just makes it so much more digestible to me as somebody that's still pretty new to the space, to understand what I'm walking into, so to speak, when I power up my apps and platforms.
Yeah, I think it's helpful to put some context around the price action. These ranges are dynamic. We know that the spot price changes. The implied volatility is going to change as well. But it's a good guide, I think. Tougher when we look at Solana, Doge, and others because we don't have an implied volatility. So all we can go off of is that backward-looking realized vol. But if you understand the characteristics of what you're trading, it does make it a little bit slightly easier, I suppose. Sure.
All right. Well, good to know. And yeah, like you said, I'm very curious to see what happens as we go into next week. I might be looking to nibble on a little bit more, actually, now that I'm saying that. So we'll see.
Yeah.
Next week's going to be a big one.
I think so, too. I'm bullish As of right now, I have no signals or indicators that would make me feel any differently. Clearly, things can change, and we can change our minds. But yeah, again, sideways consolidation after just that absolute ramp. I think the high in there is 108,000. We breached 90 today. We traded down to 89 very quickly, bid back up. So you're still within that 90 to call it 110 range. I think you trade there for now. I do think you see higher prices, but there will be a point in time where you want to sell. Is it 3 months from now, 6 months from now? We have to monitor the market. But this isn't something, in my opinion, where you just hold the entire position and only add to it and just pray that it's exactly. Yeah. Maybe 2035, a decade from now, I don't know, $500,000 per Bitcoin, $1 million per Bitcoin. People love to dream, right? The reality, though, is if you see a further extension of this rally, you probably want to take some profits. It's not going to go up forever. There are pretty clear cycles here. I think it's still relatively early in the grand scheme of things. I do think that we'll see somewhat of an alt rally or kind of rotation into alts. ETH's just been destroyed versus Bitcoin if you look at that ratio. But again, post-halving, I still think we're still, early to mid cycle. So I'm less worried about some of the pullback or the correction that we've seen off of all-time highs.
Got it. Love it.
Yeah.
Thought-provoking, head-scratching.
So what are you in? We've gone through where do I start? You're familiar with crypto. Do you have any existing positions?
I have a little bit of Bitcoin, a little bit of ETH, a little bit of Bonk.
Okay.
A little bit of Solana.
I like that. Bonk, kind of a levered Solana play. It's like a Doge on Solana.
Yeah. And then, of course, we've got the bag battles. So I am looking to and eager to hear thoughts around expanding my horizons. Like you said, there is a lot I still want to understand about liquidity pools, because that was such a thought-provoking thing for me when I was first learning about it with you a couple of weeks ago. And I think I get the general idea and the benefit of being a liquidity provider, right? But as I've said to you on and off the show, the repetition piece is what's really going to allow me to kind of stick to this. But I'm kind of in the big names other than a couple of fun ones with you and the boys. Okay.
I think you're in the right place then. Personally, my portfolio is probably 80, 90% Bitcoin, ETH, Solana. More so today on those pullbacks, I'll add to the Solana position, I'll add to the ETH position, and some other alts. Have a pretty big Bitcoin position relative to the portfolio in terms of just the weighting.
Right.
So I'm not adding as much there. What I'll probably look for is when do I want to rotate out of that Bitcoin position and then into something else that could see better relative performance.
For sure.
If you believe that Bitcoin is a 2x, so just arbitrarily throw it out there, a 2x at these levels, where are the opportunities potentially for that 5x, for that 10x? And again, just throwing out arbitrary numbers or returns, but I think that's the way that you should look at this as we get a little bit later in the cycle.
Sure, yeah.
We'll look to Bitcoin market cap dominance to roll over there as one indicator. It's currently higher on the week by, almost 3%. Yeah. So
I feel like it's almost one of those things and this has been the narrative for however many years now, right? But you've got your mainstay investments in big tech names. But as soon as something else comes on the scene that could be really breakthrough, maybe you peel off a little bit of your Apple or whatever, or Amazon or Google position, and you put it into something that's maybe a little bit more, has the propensity for more upside, I guess I would say, in a shorter time frame.
I think so. Yeah, I think you want to look for that rotation. That said, in my opinion, in my experience, the best trade here has really just been to hold throughout some of the volatility, add on those dips, and stick to what you know in those bigger, more liquid, larger market cap tokens. And it doesn't mean that Bitcoin or ETH or Solana are going to be the only three, but that's worked really well versus trying to chase some of these memes. As you've seen, they can go up 200%, 400%, whatever in a day or a week, and then they can go down 70% just as quickly. And so you can get chopped up there. And when you chase that FOMO, sometimes it's really not a very productive strategy versus just long and strong throughout the cycle. But again, there will be times where I think, even looking at those three, I want to be overweight Solana versus Bitcoin. And you can look at the ratio or the price chart, and when you see that Solana priced in Bitcoin is outperforming, or ETH priced in Bitcoin is really starting to outperform, we get some signals there, that again would be another box that you check where, okay, maybe we sell a little bit of Bitcoin here, we buy a little bit of ETH, we buy a little bit of Solana, that sort of thing.
Okay, makes sense.
So all that said, Katie, let's jump into our discussion on DeFi on liquidity pools. Let me first ask you, do you have a crypto wallet, a self-custody wallet?
I do.
You do?
On tastycrypto.
Beautiful. Okay.
And I mean, I have a couple of other apps, of course, as you and I have started to rub elbows a little bit more on like the marketing of crypto in the Tasty ecosystem. But yes, I use the tastycrypto app.
Beautiful. That is step one. I've got a slide here that we can pop up. This is what the tastycrypto wallet looks like if everyone is not familiar with this. You don't have to use the tastycrypto wallet. Tastycrypto wallet is just a front end for the wallet address that you control on the Bitcoin blockchain, Ethereum, layer 2, such as Base. We've got Optimism and Arbitrum that we just launched on. We just released an update to the app.
Nice.
I believe it was on Friday last week. And we're also on Solana. You'll need this to be able to connect to decentralized exchanges, to provide liquidity, to trade, to really be in control of your crypto on chain. This is referred to as a self-custody wallet or a non-custodial wallet versus when you're trading in your tastytrade account or your Coinbase account or wherever you trade crypto, that is a custodial exchange. You're not in control, or you're not the owner of your crypto necessarily. And that sounds like a weird way to say it, but you don't actually have control of your private key, if that makes sense.
Yeah.
It's safe, it's in the bank, but you don't have the password or the code, the combination, I suppose is the word I'm looking for, to the safe. Whereas you take it out of the bank, you put it in your safe at your house, you have the combination.
Your shoebox.
Yeah. So kind of a weird analogy, but this is something where through this application, you can do a bit more with your crypto when you're in control of it.
For sure.
Versus trading it on an exchange. And there's nothing at all wrong with trading on an exchange. It's extremely convenient. It's what I do with most of my crypto. It's just that today, given kind of a lack of regulations in the space, at least in the US, most of these platforms, tastytrade included, just aren't able to give you the same kind of flexibility or present the same potential opportunities as you have when you go directly on chain and do it yourself through a self-custody wallet. So we've built an application to allow you to do that, even though it isn't necessarily with your tastytrade account.
Got it. And I mean, as you're kind of showing here, it's pretty simple, right? Like you just create a new wallet, you can figure out how you want to back it up, and then you just kind of move on. Exactly.
So you need the wallet, and then once you have the wallet, you need some crypto in the wallet. We'll help people with how to do that, but I think most people can figure it out. You can transfer from tastytrade, you can transfer from other exchanges, you buy the crypto, you move it to your wallet address. Very easy to do that. Once you're in control of it through your self-custody wallet, you can go and do really whatever you want with it on chain. You want to send it to somebody, you want to connect to a decentralized exchange, you want to stake it, the world is your oyster.
Got it.
The blockchain is your oyster, I
Can
suppose.
we pause there really quickly? Because like this is where, you know, if you can do it between wallets or between different apps, like I know that there is an element to fees, right? Like that comes with transferring of your crypto holdings. Is there a is there a gimme or a gotcha that you kind of need to like think about as you're doing that? Or is it just like everybody's relatively comparable in terms of the fee that they charge for transferring? Or
here's how I would think about this. It's actually related to the blockchain that you're using or the network that you're using. So we're on Ethereum, but are we on Ethereum layer 1, the base chain, I suppose, or are we on another layer 2, a scaling solution, something like Polygon, Optimism, Arbitrum, Base through Coinbase?
Yeah.
That's going to determine the fees that you pay.
And is layer 2 presumably more expensive?
Much, much cheaper.
Oh.
So these layer 2 networks, this is how I would think about it, I suppose. Bundle all the transactions together and then use the layer 1 as a settlement or security layer. So instead of all of these transactions settling on ETH separately and all paying a separate gas fee, you can bundle them all together and then pay one gas fee. So it's going to be much, much cheaper to transact on a layer 2 than it is on the layer 1 today, at least. So there could be some upgrades coming that change that, but that's how it stands today. So it's not so much like the provider or the wallet. When you think about what the wallet software is, it's just a front-end client. It's almost like an email application on your phone, where you could have Apple Mail, Gmail, Outlook, whatever, all connected to the same email address. Same thing here. You could have a bunch of different wallet applications. You could have tastycrypto, Coinbase Wallet, MetaMask. You can import the same seed phrase into all 3 of them, control the same address or the crypto on chain. It just depends on which interface you want to use. Maybe you like tastycrypto because it is the Tasty brand and it has different features you like. Or maybe you like MetaMask, whatever it might be. Your crypto is all on chain and you're controlling it with this front end. It doesn't really matter what front end you use. They all do the same thing.
Got it. Okay.
So there's no fee charged by the application there. It's all on the blockchain. And then it's what blockchain network am I using?
Okay, that makes sense.
Today, when I provide liquidity, I'm primarily providing liquidity on Uniswap, which we've talked about before, but on the base network.
Right.
And it's much, much cheaper.
App-ish.
No, not even so.
Layer.
That's the other thing to understand. Completely detached from any application.
Okay.
So Coinbase as an exchange has used some software, I suppose, is the way that I would think about the Optimism stack, open source, and they've built their own Ethereum scaling solution, their own blockchain.
Okay.
So it's from Coinbase, the company, but you don't need, no, not at all. It's like, I guess, interacting with Solana or participating on another network. This network just was conceived by Coinbase.
Got it. Okay, that makes sense.
But it does a lot of the same things that all the other ones do. It's just much, much cheaper. So that's where I've been providing liquidity. But on the show, we've done this on Polygon. You can do it on Arbitrum, Optimism. Because it's Coinbase and they have such a large user base, they've been able to onboard more people through this mechanism. And that's where there's a lot of activity and volume. And so therefore, that's why I want to provide liquidity on that chain.
Yeah.
But that could change. You know, all of a sudden there's a new use case over here. You have more users. So maybe you provide liquidity on Optimism. Today, I'm primarily on Base.
Okay. And I think I asked you this previously, but when you are providing that liquidity, there's no minimum time to provide that liquidity, correct?
There's not. Yeah.
But obviously you're rewarded for the longer that you're involved.
Yes.
Rewarded, I say with air quotes. But
so let's talk about what happens then when you're providing liquidity. And if we throw up the browser here, we can take a look at Uniswap. I know we've talked about Uniswap on some of the prior Where Do I Start shows. We've discussed how you can use Uniswap to swap tokens. It's a decentralized exchange. But on the other side of that, we've talked about where that liquidity comes from. And that liquidity comes from liquidity providers. So if there's liquidity in what's called a pool, you can swap one token for another. If there's no liquidity, well, you can't do that. So we've discussed that a little bit. But on the LP side or the pool side of it, where you provide liquidity, you're going in and, you know, let me just connect our wallet here very quickly. So if you're on the Uniswap platform and you're using the tastycrypto wallet, you can do this within the mobile app. It's actually a lot easier to do that, but because we have the browser up, I'll just do it this way. What I'm going to do is now open up the tastycrypto app here, and we're going to connect the Uniswap application to the wallet here. We're going to establish that connection. So if I just go in here and I paste that code that I just copied from Uniswap, now we're connected. So now we can create a pool. And in order to do that, you have to click on pool, and then you have to click on new position. And now it's reading what I have on chain because I've established that connection. It really doesn't have anything to do with whether I use the tastycrypto browser extension or what app I'm using at this point. I've established the connection. So the Uniswap application here can read where I have various balances. Let's say that we want to do this on ETH, and I'm just showing you how this looks, or excuse me, we want to do this with ETH, but we want to do this on the base network. So we have to have both. In this case, if we want to provide liquidity for Ethereum in a USDC pair, we have to have both.
Right.
But the point of all of this is that as you go through and you set this up, you can select the range that you want to provide liquidity within. So you asked, I think, to some degree, can you do this into perpetuity? The longer that you do this and the longer that the underlying price stays within the range where you're providing liquidity, you're going to generate more in fees. You're going to yield more off of your initial capital versus if I just did this for a couple of days.
Got it.
That said, it needs to stay within the trading range. Yeah, it's kind of like a strangle, if you will.
Okay, yes, this is all coming back to me now. It's been a long couple of weeks, my friend.
I hear you there. What's happening here? Well, you're providing liquidity to facilitate the exchange of one token for another. Mm-hmm. Why would you do that? Well, you receive a portion of the fee that's charged by this protocol, that's charged by this application.
Some fraction of a basis point or something along.
Yes. If I come in here and I want to use Uniswap to trade ETH for USDC, I want to sell my Ethereum for US dollar stablecoin. And I want to do that on the Base network or the Ethereum network or any of these other ETH layer 2s. I am going to pay a small fee. It's on the notional value of the transaction. Mm-hmm. And in most cases, we'll say it's going to be about 5 basis points.
Sure.
Well, that 5 basis points goes to the liquidity providers. So instead of it going to an exchange, like the CME or the CBOE or something, the New York Stock Exchange, or instead of it going to a brokerage firm like tastytrade, this goes to those people, the individuals or the institutions, whoever it is, that are providing liquidity. So if you were providing liquidity that helped to facilitate the exchange of these tokens and that fee was charged, you're going to receive a portion of that fee.
Got it.
And that's how you generate revenue or you generate yield by providing liquidity on a decentralized exchange.
Okay, that makes sense. I think of like when you go to Coinstar, dump all your coins in that damn bucket, and then they take a little bit off the top to give it back to you in cash. It's similar. It's not quite the same, but in the sense of you are exchanging, one tangible thing for another tangible thing, but you're not getting your exact full money's worth, right? Like that's kind of...
Well, in this case, I would think of it a little bit differently. It's almost like there's this large marketplace,
okay,
and everyone is basically selling the same good, if that makes sense.
Yeah.
But you can show up to this marketplace with those goods. Let's say it's 2 different color T-shirts. One's a white T-shirt, one's a black T-shirt. Those are the only 2 things that you can buy at the marketplace. But as anybody can come in and set up a stand at the marketplace. When you set up a stand, you only have so many black T-shirts and so many white T-shirts. If everyone is buying a white T-shirt, in this case, they have to exchange a black T-shirt for it, you're not going to have any more white T-shirts left. If everyone is buying Ethereum and you start with a limited amount of Ethereum and a limited amount of US dollars, you end up selling out of all your Ethereum. You're collecting a fee each time someone buys some Ethereum.
Okay, yeah.
But you're ending up with only dollars at the end of it. So it's more like, you're a market maker in that sense, but it's more like a strangle where you don't have a defined fee that you're collecting when you sell premium, but you want it to stay within this range. And as long as it does, it'll work out for you and you generate those fees. But what you're giving up is really the opportunity cost.
Sure.
So let's say that the alternative is just to hold ETH and you're bullish on ETH. Well, if you're selling some of your ETH as it's going up, you're not going to have all that ETH that you would own at the ultimate price it lands at if it does continue to go higher. Similar to a covered call in that sense, where you're limiting your upside.
Sure. Okay.
It's just in this case, versus selling a call option and receiving premium, you have this constant market making activity that's happening automatically that's utilizing your capital that you've staked or you've deposited with this exchange. And every time that your capital is used, you get a little bit of the fee.
Okay.
If you want to pull your capital out at any point in time, you can do that. In some cases, you might pull your capital out. You'll have more than you started with plus your fees. If the prices go down, you might have less, but it could be offset by some of the fees.
Right. Okay. Makes sense.
Yeah, I know there's a lot there, and we kind of ran out of time in terms of showing how to set this all up. But it's a little bit into the concept of providing liquidity. One of the things that you can do with your crypto here through the wallet. We'll talk about this in more detail. And I think at some point, Katie, we'll get you set up where you'll be trading your own pool, or more so just creating your own pool and kind of watching the fees come in.
Yeah, we'll kick off the next one. We're going to be off for the market holiday next week. And I believe you're joining the show with Shelly on Wednesday. But
yes,
we'll get back in here soon, and we'll kick that off at like the top of the 4:30. It's not really the hour. The next show.
Absolutely. Awesome. Well, let's do that. It's been good chatting with you. Thanks for coming on the show.
Thank you as always. And thank you, chat.
Thank you. Yeah. We will be back on Wednesday, like Katie mentioned, with Shelly. So stay tuned. And then, I guess we'll see Katie back here again in a couple weeks. But thank you again. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace. Go Bills.